Welcome to the weekly market roundup brought to you by Nebraska soybean farmers and their checkoff. I am Steve White, and joining us on the program today, we have Doug Simon and Heather Ramsey. We're going to be talking about the week as we dive into the pulse of ag markets for the latest analysis and insights. It's a week where we're seeing some red on the boards, corn, soybeans, and wheat, not looking as good as we would like, and probably driven by some favorable weather and a good yield expectations. And cattle markets, on the other hand, though, boy, continue to see lots of signs of strength right there. So we're going to kick things off with an opening thought from each of our guests this week. Doug, why don't you kick us off? What kind of stands out to you about the week that was here?
Well, we had cattle markets put in new highs on the feeders and fats this week, which is impressive. Corn going toward $4 on the SEP. The August options expire today. That's kind of where big open interest was, and then 420 on the D's. So yeah, definitely more negative tone. Like you said earlier, weather's not as hot as what it was last week. And I don't know, out there, basis levels backed off quite a bit in Nebraska this last week as well, from what we saw a week ago, 2 weeks ago. So that's not helping either. But yeah, definitely a more negative tone. They announced that we sold some corn to China yesterday morning. It's like, oh, wow, that's a big surprise. And they came back yesterday mid-morning and said, no, that's not true. It's actually going to Korea, not to China. So
right.
Everybody was excited about that yesterday morning because we haven't seen sales to China in 2 years on corn. That was kind of a big deal. But yeah, big disappointment. But still some good news on Japan, on trade, potentially EU and China coming up. So hopefully we'll get some good news on that coming up here pretty quick.
And Heather, let's throw it to an opening thought for you. What stands out about this week here?
I mean, I feel like it was another week of just sort of benign reactions, which is actually can be looked at as favorable in this case because the information we're getting, it does lead you to believe we should be lower. We're just debating on how big is big, how record is record at this point in time when you look at corn and soybean production in the U.S., and we're looking at, actually, I shouldn't say we're looking at demand issues. We're looking at an exclusion of trading demand that is in existence right now, coming from this old crop into new crop environment. So we're just sort of turning a blind eye to whatever that may be. And at this point, we're leaning lower on any little tidbit of information that does come our way at this point.
Well, very good. We're going to dive more into their thoughts in just a moment. But first, this message from the Nebraska Soybean Board.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Welcome back to the weekly market roundup. We talked about it as we kicked off the show, but the weather and the impact that has had, crops are looking really good. I talked with a grower the other day in Custer County. He had a lot of water running through his fields. He picked up 2.5 to 3 inches in just a really short amount of time. He said the next day that water had all cleared out, and he says he really wasn't too worried about it. Things continue to look really good. How much is that weather outlook really impacting things? I mean, really, it looks like we could have a glut of corn this year. Do we have enough demand to absorb all that? I mean, Heather, what are your thoughts that way?
Well, I think at this point in time, there is definitely not enough demand on the books to absorb what we're looking at here. We're talking about a record crop, not just in Nebraska, but, nationally, that yield is being debated right now. I've heard some really extreme thoughts about what the national corn yield could go to. And I always caution people, let's not get the cart ahead of the horse here. But we're looking at a good expectation to be at least at trend line, most likely better. So right now, using that 181 calculation, that's probably going up. So it does look like potential to be a record U.S. crop. What I will always talk to my customers about is yes, that probably is going to put a drag on the market, but low prices also incentivize demand to continue to develop and to continue to, move forward in more volumes out of other, locales that maybe we don't expect from an export standpoint. Cheap feed grains will get used up at some point. We have record cattle prices on one side and cheap feed grains on the other. And that's a recipe to actually be building demand if we can just kind of get all of the right bits and pieces to align. So Weather is good. I don't have anybody that I'm concerned with in the state of Nebraska as far as, production goes. I think when you look at the overarching theme of Iowa and Illinois and then Minnesota, those are your top 4 corn producers in the country. Things look pretty dang good. And even though there are some, mentions here or there of an issue, they're not enough to really outweigh what good production does look like in those states. And so, yeah, we're looking at something pretty fantastic here. This is a good opportunity when you can produce more bushels than what you're expecting. It's always a blessing. Even if the prices are not what we want them to be,
Sure.
More bushels is always better. So we're going to make the best of this.
And Doug, throwing it over to you. I mean, what are your thoughts? Do you share that sentiment, or do you read it?
That sentiment, I would say, is true. I've been around different places, was down in Missouri last week, and the crop looks great everywhere. I think, some people are worried that they didn't, put on maybe the amount of nitrogen that they would have done if prices would have been higher. There's fringe acres. So, are we going to be a 185 to 189 yield? I don't think we'll get up to that level, but we'll certainly be maybe up toward that 181. And like Heather said, maybe up toward 185, somewhere in there potentially. So I think we've still got another, 5 weeks to see how the crop turns out. It's pretty tender crop. There's looks great. If this heat is not supposed to be coming, we're supposed to have several hot days coming up this next week, then it's supposed to cool off. But the last 3 years, we've had kind of late finishes we've been dry late, which have taken bushels off. So there's still potential for that to occur in some areas. I mean, there are still some deficits, with subsoil, even right here east of Lincoln, kind of where I grew up, we don't have a lot of subsoil. We had a half-inch of rain the other night, but that's going to definitely help us. But there's some areas that are maybe not going to have that record potential, but it just depends on how we finish out too. So there's still a lot to happen. They're probably more concerned about basis levels and what's going to happen here if we do have these bushels. In terms of Nebraska basis, like I said earlier, it's backed off probably 20 cents, 10 to 20 cents here. Kansas market backed off. There seems to be enough old crop corn around right now that we're not too terribly concerned. And so we're looking at what are we going to have for a crop? What are we going to have to store? What are we going to have to move at harvest for both corn and the beans? The bean basis levels are probably a dime less than what they were at Lincoln last year. They're 25 last year, 35 under the nose. If you go out to Norfolk, they're about maybe 5 cents less than what they were last year. But then we also have David City coming on to buy beans. They're buying beans right now. So that's going to give us a really nice opportunity here in central and eastern Nebraska to be able to haul to somewhere that's fairly close to us, which will reduce our freight cost and will be actually net be better basis of what we're getting relative to hauling away to for the market. So there are some opportunities there coming up. You need to be looking at those basis opportunities.
Absolutely. Something that was interesting this week, we had some headlines at least saying trade. We've got some trade deals. When you look at it, though, I don't know if we use the word framework or announcement, anything actually in print on paper that says here's who's buying what and here's what barriers are being eliminated. That's a little hard to find. Heather, what do you make of what we're looking at there?
I think you're absolutely right. The overarching comment that we have a deal. What is the deal? And the trade, the funds, the people with lots of money in the game that can actually move something based on trading the specific, you're right, framework or details of a trade deal are kind of sick, I think, of hearing we have a deal and then there's no information to back it up. There's no, finite, this product, here's the tariff reduction or, whatever that may be. It's really hard to trade something that you don't have any clue what it is. So I kind of joke internally here that at some point we're either going to find out that all these trade deals actually didn't have any meat behind them. And then the markets, we've already digested nothing, right? Or we're going to show up one day and there's going to be 5 trade deals with all of the all the framework, all the things necessary to make that work on the table, and the market's going to lose their mind. So we're just sitting here in no man's land. Nobody's willing to trade the what ifs because we've been burned in the past on that over the last 6 months really. So I think the market is just sort of like, love that you're saying that, but give us some details. We don't know how to trade it if we don't know the details.
Absolutely. Doug, would you like to see a little more details, a little more meat of what actually we're talking about there?
Well, speaking of that, I cut my teeth in exporting beef to Europe probably 30 years ago. And the thing we always fought was non-tariff trade barriers, not only there, but also exporting product to Japan. That's still what we're fighting, even with China. There's, different, the non-tariff things around information technology and different intellectual properties. So I think the whole tariff issue is really trying to make trade actually truly more free and more, fair. And so I think that's what the administration is doing. So there are a lot of devil in the details in terms of getting that stuff sorted out. Japan, for example, imports a lot of beef from us. China had been importing beef. So those are important things for Nebraska. The pork is the same thing in both China and in not so much in China going forward, but in Japan as well. So there is a lot of devil in the details, but hopefully we'll get something sorted out. The three, Japan, European Union, and China, they are the three big ones. And those are the ones that we still need to get the details figured out on.
Well, guys, our program is quickly coming to an end. This time goes so fast. I want a quick comment from everybody. Quick, though. We haven't talked much about soybeans yet. Any big takeaways from either of you on what's it going to take to maybe spark a little rebound on soybeans?
1020 price right now. We'd like to see them get back up to 1080. We're not down in the $9 levels that we saw when we had the first trade war, so that's good. There's a big crop, in Brazil. The U.S. crop, looks to be fairly decent, but again, it's going to be a big question of what are exports going to be out of U.S. to China. Unfortunately, they don't look to be very robust going forward, so that's not real great. But our crush values are still pretty decent, and with those new new crush plants here in Nebraska, that gives us some good basis opportunities off a combine, which are nice to look at.
And Heather, any thoughts on soybeans?
Yeah, I would agree with that. I think one of the concepts in this country is that beans move at harvest, and that's about it. And so where we have a reduced acreage, even though the yield will be great, there is a reduced acreage out there. These bean processors, these co-ops who cut their teeth on buying beans and shipping them later. I mean, they're going to really want to own beans at harvest. You're going to need to. There's very little on-farm storage for soybeans across the country, just as a general standpoint. And so everybody knows we need to buy those beans at harvest. I think that the power is actually in the farmer's hand for beans this year. And as much as I definitely agree, I would love to see some better futures pricing on soybeans. There's good ways to try and pick apart that cash price at the end of the day and maximize your basis values. If you've got those beans and you've got some power to negotiate there, I think that's an opportunity for sure.
Well, we've come to the end of our program. I appreciate both of you for joining us. We've got, again, our guests this week have been Heather Ramsey and Doug Simon, and this is Nebraska's weekly market roundup. As a reminder, commodity futures do involve substantial risk of loss and is not suitable for all investors. The weekly market roundup brought to you by Nebraska soybean farmers and their checkoff.